Hello and welcome to another session of C4S classes where we'll be discussing MCQs related to finance. Okay, so first question for today is in 2024, the Indian government expressed concerns over its sovereign credit rating, arguing that it doesn't accurately reflect the country's economic growth. What is the current credit rating of India and why is this significant? So, options are A plus, double B plus, triple B minus, triple A, and double A. So the answer for this question is C. The credit rating for India is triple B minus. And it is, why is it significant? So it is the lowest investment grade credit rating given to a country. And it is showing or indicating that cautious assessment by rating agencies. So this ratings are relative in nature, and most of the rating agencies are giving India this rating. That means they are not giving the rating that should be there as per India's economic performance. So India's sovereign credit rating is given like triple B minus by S&P, that is Standards and Poor, and Baa3 by Moody's. Okay, so it is considered as the lowest investment grade. Now, despite being the world's fifth largest economy, India has not received a higher rating due to factors such as fiscal deficit and debt levels. This rating is noteworthy as it contrasts with other large economies that typically hold higher ratings. So, Indian government is not happy with the rating that these credit rating agencies give. And why this rating is significant? Because this rating is pro-cyclical in nature. Pro-cyclical in nature. So what is this pro-cyclical means? So if India is booming, India's economy is booming, and rating is good, then this rating will impact in better economic performance of the country, because this rating will tell that this economy is good to invest. But if this rating comes bad, then the investment activity in the country can go down, because the rating will indicate that the country's economic performance is not up to the mark, and the investors that are investing in the economy may suffer losses. That's why credit ratings play an important role in growth performance of a country. Okay, so moving on to next question. In recent years, India has seen a significant growth in real estate investment trusts, which have opened new investment avenues for retail investors. What is a primary feature of REITs that makes them attractive to investors? So options are high capital requirements and low liquidity. Next is tax-free dividends for all REITs. Third is direct ownership of physical real estate by individual investors. Fourth is pooling of funds to invest in income generating real estate agents assets. And fifth is exclusive investment opportunities limited to institutional investors. So the answer for this is D. That is pooling of funds to invest in income generating real estate assets. Okay. So currently REITs are again in news because SEBI has directed Embassy Office Parks, it is a REIT, okay, to suspend its CEO. So basically what REITs are, it allows investors to pool funds to invest in income generating properties. So what REITs are, just like mutual funds, it will collect money from the investors, and this pool of money will be invested in real estate properties. And there are certain conditions or regulations by SEBI, like 80% of the revenue generated should be derived from properties that have already been completed. Okay, So 80% of the investment should be in properties which are already completed. One of other regulations is 90% of the revenue generated should be distributed to the investors. Okay. And the investment amount ranges between 10,000 rupees to 15,000 rupees. Okay. So this is the minimum amount you can it is the least amount that you have to invest. After that you can increase your investment if you want. Okay. So next question is, the rupees decline to an all-time low is attributed to persistent foreign fund outflows. So we discussed this in last session where FPI outflow was discussed, and a lackluster performance in domestic equities, which negatively impacted investor sentiment. Which of the following is a potential effect of currency depreciation on a country's economy? So options are decrease in export competitiveness, increased cost of imported goods, strengthening of the local currency, lower inflation rates, reduced foreign investment. So the answer would be C. If currency is depreciating, then what it will do? It will increase the cost of imported goods. Okay. It will, and depreciation of currency will not lead to strengthening of local currency. It will increase inflation rate, and it will reduce foreign investments. See, it depends. It is not necessary that it will happen, but this is the most sure thing, because when it is depreciating, it will lead to increase in cost of imported goods. So this is again in news that rupee value has fallen down to all-time low of 84 rupees 13 paisa for $1. Okay. So currency depreciation leads to higher cost for imports as it takes more local currency to purchase foreign goods. This can also affect inflation rates as import price rise. So again, this is a reminder that we have launched UIIC AO exam test series. These are the features, and you can visit our website and Telegram group for more details. Okay, links are given. Okay, so next question for the day is, what is the maximum exposure that Indian mutual funds can have in overseas mutual funds or unit trusts that invest in Indian securities according to the recent SEBI regulation? So this is a recent circular by SEBI. The answer is 25%. Okay. So SEBI has set a limit of 25% exposure to Indian securities for overseas mutual funds or unit trust in which Indian mutual funds can invest. Okay. So last question for the session is, according to the recent proposals by SEBI, what is the minimum ticket size for investment in securitized debt instruments, that is SDIs, for RBI regulated originators and unregulated entities engaged in securitization? So answer for this is 1 crore. Okay. So this is the recent regulation. Okay. Where SEBI is proposing 1 crore minimum investment limit. So that's all for today's session. Thank you and have a nice day.